A bank is a financial institution that accepts deposits from the public and creates credits. In India, the banking sector is regulated by the Reserve Bank of India. Let's understand the various types of deposits in banks. Savings account. Savings accounts are handy for short-term savings. You can deposit money into a savings account at any bank. This will keep your savings safe while paying little interest. You can take your money whenever you need it. Recurring deposits, popularly known as RD, are best if you wish to create a fund by periodically saving for any special occasions such as buying a car or a house. These are suitable for people who do not have a large amount of savings but are ready to save a small amount every month. No withdrawals are allowed. Fixed deposits, commonly known as FD, this is where you can deposit a sum for a fixed period. The depositor is given a fixed deposit receipt, which the depositor has to produce at the time of maturity. Withdrawals are not allowed. However, in case of need, the depositor can ask for closing the fixed deposit account by paying a penalty. Deposit insurance. The Deposit Insurance and Credit Guarantee Corporation insures all deposits such as savings, fixed, current, recurring, etc. Each depositor in a bank is insured up to a maximum of rupees 5 lakh for both principal and interest amount held by the depositor. Let's look at the Pradhan Mantri Jan Dhan Yojana. Under the National Mission for Financial Inclusion, which was launched on 28th August in 2014, it envisages universal access to banking facilities with at least one basic banking account for every household. Financial literacy, access to credit, insurance, and pension are also some benefits. The government has decided to extend the comprehensive PMJDY program beyond 28/8/2018 with the change in focus on opening accounts from every household to every adult with the following modifications. The existing overdraft limit of Rs 5,000 was revised to Rs 10,000. No conditions attached for active PMJDY accounts availing OD up to Rs 2,000. Age limit for availing the overdraft facility was revised from 18 to 60 years to 18 to 65 years. The accidental insurance cover for new RuPay card holders was raised from existing 1 lakh to Rs 2 lakh. To new PMJDY accounts opened after 28/8/2018. Let us now look at banking in India. There are various types of banks. Let's have a look at some of them. Traditional commercial banks. These include public sector banks, private sector banks, and regional rural banks. Public sector banks. The government is the major shareholder in public sector banks. In India, the nationalized banks and regional rural banks come under these categories. Examples are State Bank of India, Bank of Baroda, Punjab National Bank, etc. Private sector banks. Private shareholders hold majority stakes in these banks. Reserve Bank of India lays down all rules and regulations for private sector banks. Examples are HDFC Bank, Yes Bank, Axis Bank, etc. Regional rural banks. These banks were established mainly to support the weaker sections of society such as marginal farmers, laborers, small enterprises, etc. They mainly operate at regional levels at different states. Let's look at cooperative banks. What is a cooperative bank? The rural cooperative credit system in India is primarily mandated to ensure the flow of credit to the agricultural sector. It operates with three-tier system: primary agricultural credit societies at the village level, central cooperative banks at the district level, and state cooperative banks at the state level. Urban cooperative banks cater to the financial needs of customers in urban and semi-urban areas. New banking models. Payment banks. These banks can accept a restricted deposit which is currently limited to Rs 1 lakh per customer and may be increased further. Payments banks can issue services like ATM cards, debit cards, net banking, and mobile banking. Examples are Indian Post Payment Bank. Small finance banks. These banks provide the basic banking services of acceptance of deposits and basic lending. The aim behind these is to provide financial inclusion to sections of the economy not being served by other banks, such as small business units, small and marginal farmers, micro and small industries, and unorganized sector entities. Development finance institutions. A development finance institution, also known as a development bank, is a financial institution that provides risk capital for economic development projects on non-commercial basis. Examples are Small Industries Development Bank of India, National Bank for Agricultural and Rural Development, National Housing Bank, etc. Microfinance institutions. Those institutions which have microfinance as their main operations are known as microfinance institutions. These institutions not only offer microcredit but they also facilitate the provision of other financial services like insurance, remittance, and non financial services like individual counseling, training, and support to start micro businesses. Non banking financial company. A non banking financial company is a company registered under the Companies Act 1956 to 2013, which is regulated by the RBI, NBFC, and is engaged in the business of loans and advances, acquisitions of securities, leasing of business, hire purchase, insurance business, chit business, etc. They are different from banks as they can't accept demand deposits and cannot become a part of the payment and settlement system. Business correspondent. Banks have been allowed to appoint local individual persons and others as a BC to work as agents of the banks. The BC uses information and communication technology based devices such as handheld machines, smart card based devices, mobile phones, etc. BC is a mode of providing banking service at our doorstep as the bank branch may be far off from our area. Credit and debt management. Many people need to borrow money for buying a house, car, or to pay for their children's education. This is called credit. Financial experts often distinguish between bad debt and good debt. Good debt is an investment in something that creates value or produces more wealth in the long run. Bad debt is some debt taken to buy something that immediately goes down in value. Let's look at some examples of credit. Short term credit. Examples are working capital, credit card. Long term credit. Examples are housing loans and industrial loans. Let's now look at the Kisan credit card. The Reserve Bank of India and NABARD together initiated the KCC's conception in order to assist agriculturalists to have easily accessible cash credit facilities. The farmers may use the KCC to readily purchase agricultural inputs such as seeds, fertilizers, manures, pesticides, etc. KCC helps in short term and timely credit requirements for cultivation of crops. A check. A check is a document that orders a payment of money from the bank account. Let's now look at examples of government credit schemes. Educational loans through the Vidya Lakshmi portal. Easy and effective system of getting educational loans so that no student leaves his or her education midway due to lack of funds. Pradhan Mantri Awas Yojana is a credit-linked subsidy scheme for lower income groups or economically weaker sections of society and middle income groups. Individuals are eligible to avail the subsidy when they are purchasing their first house or if it is a new construction. Pradhan Mantri Mudra Yojana is a government scheme that offers business loans to proprietors or entrepreneurs of small and medium industries. Loans offered are Shishu, Kishore, and Tarun, depending upon the amount of loan availed. The key documents required are proof of identity, quotation of items purchased, and category certificates.